How's it going, everyone? Welcome back to the Invest in Wealth channel. Today's video, we're going to be taking a look at the top quality dividend stocks to buy now in the US markets. So as you all know, we are in a bit of a market pullback here, but not to fear, this is a fantastic time to buy. There are some really quality companies out there that are on sale, and today we are going to be looking at those companies that pay a nice dividend for all of those investors who like the income in your portfolio. So without further ado, let's take a look at the stock picks. The first company that we are going to look at is McDonald's, ticker symbol MCD. So McDonald's has sold off quite a bit here. There is some great value to be had in this stock. So 1 month, they are down 8.36%. On the 6 month, they're down 9.29%. 1 year, they are up 7%. Over the 5 years, this is definitely a dividend growth stock. They're up 53.5%. And then all time, they're up a whopping 10,173%. But there is some great value to be had here in McDonald's. Their 52-week low is $232, and their 52-week high is just under $300 here. This is a massive company, market cap of $186 billion, and they do pay out a nice dividend yield of 2.38%. But like I said, this will be classified as a dividend growth stock, as they do provide excellent growth over the long term. Plus you get that nice about 2.4% yield on top of that growth. So why I like McDonald's, this is a top quality company. They have 40,000 stores and they are in 119 countries. I'm sure almost everyone on this planet has eaten at McDonald's. I'm sure most of you guys drive by 4 or 5 on your way to work. This company is just everywhere. I see it being around pretty much for forever. Just some great growth opportunity here, as it has sold off quite a bit the last 6 months. Plus you get that nice yield. So that is the first pick, McDonald's. Next on our list, we have Bank of America Corporation, ticker symbol BAC. So the financial sectors in this high interest rate environment, they have been dropping quite a bit. Mainly the banks, both Canada and US, have been hit very hard, but there is some great value to be invested into the financial sector. Once interest rates start to cool, you're going to see a huge spike in the share prices, I'm assuming. But taking a look at Bank of America, last 5 days down about 4.5%. Last month, they're down just under 10%. Last 6 months, they are down 6.15%. In the last year, they are down almost 19%. And in the last 5 years, they are down 14.2%. So they are nearing their 52-week low. I do believe that they hit this today. So that is 25.58. And their 52-week high is 38.60. So there is definitely some capital gains to be had here in Bank of America. Their market cap, this is a larger company than McDonald's, sitting at a $206 billion market cap. PE ratio, super cheap, looking at 7.5 for the PE. And then dividend yield, they are paying a nice 3.7%. And they do pay out their dividends quarterly. So Bank of America is one of the largest institutions in the United States. They have more than 2.5 trillion in assets. So this is a huge wealth manager. They have a ton of assets, solid business, and this, in my opinion, is a fantastic buy for the long term. Plus, you get that nice 3.7% yield. So that is Bank of America Corporation. Next company we're going to talk about is AT&T, ticker symbol T. So this is a telecommunications stock in the US. So in the telecommunications business, they normally do run high debt. And in this high interest rate environment, they do struggle, and you have been seeing the share price drop quite a bit here. So let's take a look at the 1-year graph. They are down 8%. The last 6 months, they are up 1.17. The last month, they are again up 1.17. Then over the last 5 years, they have dropped a staggering 43%. So there is some big value here. I don't see too much growth in AT&T as of now in the short term, but over the long term, this is going to be a quality company that you are going to want to own. Plus, look at this massive yield of about 7.6%. So this is the third largest telecommunications company in the US. Their market cap of $104.7 billion, 52-week low, 1346. So it's nearing its low. If you're thinking about buying, I would just hold off. I do believe AT&T will go a little bit lower, but their 52-week high is 2153. So this is a good quality stock to own for the long term, but I mainly like this here just for the dividend. I do see the telecoms bounce back once the rates start to get lowered there, but that's kind of what's going to happen with most stocks. So yeah, exciting to see what TNT will do in the future, but as of now, I'd mainly just look at this as a dividend stock, as they pay out a massive yield. Moving along, next stock we are going to look at is Ford Motor, ticker symbol F. So this is a very interesting stock here. Right now they are trading just a hair under $12. Last 5 days they are down about 3%. Last month they are about even. Last 6 months they are down 3.5%. In the last year they are down 4%. Last 5 years they're up 32%. In all time, they're up 370%. So why I like Ford, they are soon to be hitting their support here. As you can see, their bottom is about $11. As you can see with their 52-week low as well. They're just about to hit their support line here. And there is a lot of capital gains to be had in Ford. Their 52-week high, 1542. They also pay a nice 5% dividend yield as well. Decent sized company at just under $50 billion in market cap. But moving forward, I do see Ford shifting into that EV space. I think they are going to be a huge player in that field moving forward. So that's why I do like Ford for the long-term hold. I think there's tons of capital gains to be had here. And while you wait, why not just pick up that nice 5% yield as well? So Ford has about 12.5% the market share in the United States, 6.5% share in Europe, and about a 2.4% share in China. A lot of analysts think that they are going to be having a larger percentage of the market shares once they do start really picking up in that EV sales. They could honestly be a big competitor to Tesla in the future, but we'll have to wait and see. But that's Ford Motors. Moving on to probably my favorite stock on the list, we have Enbridge, ticker symbol ENB. So this stock has been selling off quite heavily here. As you can see, the last 5 days, they're down 6.7%. Last month, they were down 11%. Last 6 months, down 20%. In the last year, same story, down 20%. Last 5 years, down 7%. So Enbridge, They are at a 52-week low right now. Their 52-week high is $42.12. Big company, $67 billion in market cap. And check out this extremely high yield of 8.4%. That is a dividend investor's dream. So a little bit about Enbridge. They transport natural gas across the US and Canada. They have oil sand pipelines, natural gas pipelines. They operate a regulated natural gas utility. They're Canada's largest natural gas distribution company. They just bought 3 companies in the US as well, so this will make it North America's largest natural gas utility. And they are also getting into that renewable power energy sector. So I think in the future, they are going to be switching to that renewable power. So I do see some great long-term growth as well with Enbridge. And this is at a very big value here. Lots of capital gains to be had. And while you wait for the stock to kick up back to its previous highs, you're collecting that nice 8.4% yield, which is fantastic income. Last but definitely not least, we have Realty Income Corp, ticker symbol O. This is the only stock on the list that does pay out a monthly dividend. So this is a Realty Income Corporation. It is a real estate investment trust. So that is a REIT. So in the high interest rate environments, REITs do get hit very hard. So there is some extreme value to be had here with Realty Income. As you can see, down about 17% this year. Last 6 months, down about 21%. So like I said, this stock does pay out a monthly dividend. It does not say it here, but it is 6.2% dividend yield. They are touching their 52-week low here, and their 52-week high is just under $70. So once the interest rates do start to cool off, REITs are gonna spike pretty hard. There's gonna be lots of capital gains to be had. So that is Realty Income for the last pick. Hopefully you guys are taking advantage of this dip here that we are having in the markets. There are some extremely valuable companies here on sale. I just gave you the list of my favorites for the dividend stocks, but there are some great growth stocks out there that are on sale as well. So hopefully you guys learned something new in this video. Make sure to like and subscribe if you enjoyed, and thank you so much for watching. All right, I'll see you in the next one. Thanks, bye.